Hello. In this video, I'm going to walk you through the finished model and the types of things that you'll learn in this course. Originally, I was planning to put together some dot points on the website to explain the key sections of this model and this course, but I soon realized that there's just so much here over the 20 to 25 hours, whatever it is, of course materials and video recordings that I thought a good way to take you through it would be actually just to take you through the finished model so you have a pretty good sense of what to expect over this course and the types of things you'll learn. Now, one thing I'll point out initially before I sort of take you through each of the key sections is just the look of the model. Now, for me anyway, I think it looks very clean, consistent, it's nicely laid out, it's sort of visually appealing. In this case, I've created this fictitious company called Pretty Good Chairs and Tables. It's a furniture retailer and it's got 10 odd stores. I can't remember how many I put. But ultimately, this sort of is a type of model and type of layout that you could use for a company to present its numbers using the company colors in just a clean and consistent way. So you'll see here that everything is nicely formatted. It's very clear where the headings are, the subheadings. It's very clear, where the percentages are and margins are different from the P&L. When you get to some of the assumptions sections, it's very clear to me where each of the store P&Ls are and what the inputs are. The inputs are yellow and are dynamic. Anyway, just at the outset, it's just wanted to comment on the fact that, when I'm building a model on the sell side to sell a business, or I'm reviewing a model on the buy side, if the first impression is that the model is very clear, nicely laid out and organized, it sort of makes you think that the company you're reviewing or selling is also well organized and well considered in the materials that it puts out, which I think is very important because, when you're reviewing a model on the buy side that is not well organized and looks messy and is a bit all over the place, it sort of immediately just sets the perception that the company is disorganized. So I think it's important to lay things out nicely. Others may disagree, but that's something I've always done. Anyway, the first section of the model is something I call setting up the source data. So what I've done here is I've recreated a set of accounts that you would expect this sort of layout from just about any set of management accounts for a private or a listed company. And I've sort of deliberately set them out on individual tabs. So what you can see down the bottom here is that for each year, so FY22 is the first first year of actuals, we've got a group P&L, which is the store and the head office P&L combined. But then of the store P&L, you can see that's broken down into store A, store B, C, and so on into store I, and later in the later years store J. So this is very deliberate because you're often faced when you're building these sorts of models with a situation where you're given P&Ls over many tabs, many Excel files across many different financial years. And another thing I've deliberately done here is made it so the number of rows are different across the financial years. The row headings are different. So basically an inconsistent data set across many years, and you're tasked with how best to pull this together into one tab or just the baseline of the historicals for the model in a way that's consistent, in a way that is error-free or done without making any errors. So I show you a way to do this that I use for just about every model that I build. And to be honest, I'm doing it here over however many 10 odd tabs for each year, but I've used this for literally a model where I had to pull from over 1,000 tabs because that's just how I was given the data across hundreds of stores in that particular deal. So the approach I teach you can just scale to literally any number of tabs that you have to use, basically until Excel reaches its limits of how much data it can process. So in this section of the model of the course, of setting up the source data, I'll talk a little bit about what you assess and how you best pull this through. There's a few different ways to do it. I'll show you one way that works for me. I show you how you can map the source data in sort of a dynamic way. So what you'll see from these cells here is that they're not actually just words. They pull from another tab, which I call the flags and dates tab, where you've got sort of a central source of the rows and headings and mapping that you use, which again, with all of these things, what I deliberately do is create a situation where you're building these things once, and then you can copy and paste it across other tabs and replicate it very easily for other stores. So as an example, you've got all these store P&Ls, you've got store A, B, C, and so on. You don't want to have to pull this through separately or again for each individual store. What you want to do is basically create it once, change a drop down. So this is set at store B. If I change this to store A, everything updates automatically. Now there's an error because there should only be one of each store, and now there's 2 store A's. But basically done in a way that's clean, consistent, the checks automatically update, there are no errors, and it all pulls through correctly every time. So just little tips and tricks that'll just save you hours and often literally days of pulling stuff through, updating things over the course of a model build. The second section of the model is forecasting the store P&Ls. So what I've done here similarly is for each store shown you and talked actually in quite a lot of detail about why you even choose to forecast at this level of detail. Why don't you go into more detail? Why don't you go into high level or less detail and summarize it a bit more? So there's quite a lot of thought and logic that goes into that. Obviously, it's an art, not a science, and there's a lot of thinking you have to go through to sort of come up with the most appropriate way to forecast so you don't run into any issues later on in building the model. But take you through exactly how to set out growth forecasts for revenue, your margins, expenses, whether that be growth year on year, percentage of sales. And I mean, there's just so many different ways to forecast these line items, and I talk you through some of those. Also talk you through seasonality and how you actually phase it over the course of a year. So you might be forecasting 10, 20% growth in revenue, whatever it might be, but how are you forecasting each month? And I take you through the phasing, which again is dynamic. You can change it for different years. You can make your own custom formatting, and that all flows through into populating the monthly numbers over here. Again, each store is literally just a change in drop down, and then everything updates. So you build it once, and that's all you have to do. You just copy and paste it down and change the drop down. Another thing which is quite useful is you're often faced with a situation where a store or product line, whatever it might be that you're forecasting, is one where there isn't a full year of actuals. So you're given less than 12 months of data. So how do you actually use that to forecast? Well, I show you an approach to annualizing it, choosing the appropriate seasonality, what you can base it off, and how you go about doing that. So just all these little things, these little potential issues and roadblocks that you very, very often come across in model building, and I sort of deliberately put them into this course to show you how to solve them. So hopefully through these sections you pick up a lot of really good skills that can just be applicable to so many different types of models that you'll build. The third section is forecasting new stores. So we've just forecast existing stores where there is a baseline of performance, and you use that to build the forecast from. But sometimes you want new stores or new product lines or new categories the company is entering into, whatever it might be. How do you go about building that? So, I show you this thing here that we call a template store, where we say in year 1 or year 2 or year 3, the store should be generating X, Y, Z of revenue and costs and margins and gross profit and EBITDA, and then how you ramp that up. So, in the first year, what sort of percentage of full capacity, I guess, would you expect the business to be generating, and how does that flow through? And then you build a bit of a model store or a template store, and then you can say, well, I want one store opening in January, one in July, one in March. You can turn them on and off, and sort of just change the phasing of when they come online. So super useful, and just has so many applications in lots of different models that you'll build. So I thought it was worth putting this in to show you, which again is just very, very useful. And then, you'll see here there's lots of P&L line items to forecast here, and same sort of thing. You do it once, you change a drop down, and everything automatically updates. So it looks like a lot of modeling, but it's literally one type of model, one little table which you make dynamic deliberately, and then it's very easy to copy and paste and pull through. The third or fourth section rather is head office, which not dissimilar from what we were showing you before, but in terms of forecasting the expenses over here, but added in this other little section, which is, you might add in a new staff member at a certain date. So is a business growing and going to be adding in new hires at different dates? I show you how to do that with sort of a system of flags and when they come through, which you can see over here. This is the same as adding in a new warehouse, signing a new lease, whatever it might be. So again, just so useful in the different types of models that you might build. So I thought it was worth adding this in. In section 5, show you how to model the full balance sheet. Well, sorry, section 5 is most of the balance sheet. I'll explain why in a second. But modeling the balance sheet. So, if you're looking at trade and other receivables or debtors, what's the key driver that you use, which again, we make dynamic. How do you calculate debtor days? What periods are you looking at? How can you then go through and copy and paste this down to calculate inventory in a similar way? Which, we have a sort of a unique adjustment here that we show you where it's a function of adding new stores. How do you calculate, creditors in the same way based on creditor days, whatever it might be. Fixed assets. So PP&E, how do you forecast that based on your existing fixed assets in terms of, modeling a full depreciation schedule where you've got, your monthly depreciation and your opening balance, your accumulated depreciation, and your closing balance. New capex and how you forecast that in terms of building a full depreciation schedule. So all of these things that will just be so useful anytime you want to model a balance sheet. There's just lots of different line items here, and I talk through each account and exactly how you would think about modeling it. In section 6, I think it is, the rest of the balance sheet, debt really is the key thing. So you'll see down here in this loan section, I show you how to build a full debt facility, or, model for modeling a full debt facility. In this case, I show you senior debts. What are some of the inputs you would expect with a debt facility? Well, there's usually an amortization profile. There's fixed and variable fees. There might be, deferred payments or accruing interests and then only paying it in certain months, or PIK interests, which is paid in kind, where it's basically accrued and paid at the end. Whatever it might be, all of the bells and whistles of debt modeling I show you here. Covenants. So when you have a debt facility, what covenants does the company have to maintain, where it has to have, enough interest cover, or it has to have a ratio of net debt to EBITDA at a certain level to not trigger the covenant. All of these things I pull through and have, if you don't see them here, but this check over here has alerts for particular things that might come up if you're breaching any of the covenants. So I show you how to build all of that. And then finally, pulling everything through into sort of group financials. So if I expand all of this, we've got the group P&L where everything pulls through, the group balance sheet, which again comes from all of those other assumptions and inputs on the other tab, and then the cash flow. One of the big challenges for someone building their first model is often getting the financial statements to balance. So you can see down here, a full three-way model which has everything balancing, the cash balancing to closing cash on the balance sheet, and exactly how that works, and different considerations about how to lay this out. So very useful model. And as I sort of mentioned before, if you think about the types of things that you'll learn here, depending on if you're building a model on the buy side, the sell side, for refinancing, for debts, for capital raising, even on, for private equity models. I mean, so many of the models I've built have been used by or scrutinized by private equity and, big four accounting firms. They straddle the line between financial models or transaction models and operating models. So a lot of the models I've built are used internally by the company when they run their business. So all of these skills that you learn in this course will get you literally 90 to 95% of the way there on just about any model you'll build. There's obviously nuances along the way depending on the circumstances, but it just gives you enough tools in your arsenal to be able to build it in this way. Another thing that I'd probably mention as well is that I deliberately don't cut out any mistakes when I'm building this model. Now I've been building models coming up on 10 years, and it's inevitable that you will make mistakes along the way. It's just part of the process. So I give you lots of tips and tricks along the way to put in place checks and different processes you can build in that will allow you to find a mistake or identify a mistake and then find exactly where it's coming from. There's nothing worse than when you're building a model, something comes up, it's not balancing, and you just don't even know where to begin looking. So it's very important that you have a lot of checks in certain ways along the process and along the model build that allows you to identify and then fix any errors very quickly. So I think that's a pretty useful part of building the model. So yeah, that's a 15 odd minute overview of the types of things you'll learn. There's obviously just so much more in this course that you will learn, but hopefully that gives you a bit of an idea of the end goal and what it will end up looking like. And yeah, it'd be great for you to join in and do the course.